Welcome to Yahoo Finance. It is 11 a.m. on the East Coast, 8 a.m. on the West Coast. I'm Brad Smith, and here's what I'm watching this morning. Stocks look to make a comeback after the worst week of 2023, but there's a lot of catalyst in the days to come. Retail results from Target or Target and Costco. They're going to provide food for thought for investors. We'll take a closer look. And the AI train chugs along. Everyone and their grandma looking to get into the ChatGPT game. Tencent and Snapchat, the latest names reported to be developing their own versions. We'll deep dive into all of that. And adding to the confusion, a report from the Wall Street Journal suggests a U.S. agency is backing the Wuhan lab leak theory. Is there a growing divide in the intelligence community? Big question here this morning. We discuss this hour. Its highest ever annual operating profit of over $30 billion. That's a 12% increase from 2021. Berkshire used just over $2.8 billion to buy back its shares in the fourth quarter. That's down on an annual basis. Buffett used the letter to touch on some of his favorite topics, including buybacks and, quote, the economic illiterate that criticize them. At the end of 2022, Berkshire Hathaway's top 30 common stock investments had a combined market value of almost $300 trillion. The top holdings included Apple, Bank of America, and Coca-Cola. In this year's letter, Buffett pointed to a simple investment variable: time.
Taught by Ben Graham to buy things on a quantitative basis. Look around for things that are cheap. And that I was taught that, say, in 1949 or 50. It made a big impression on me. So I went around looking for what I call used cigar butts of stocks. And the cigar butt approach to buying stocks is that you walk down the street and you're looking around for cigar butts and you find this on the street, this terrible looking, soggy, ugly looking cigar, one puff left in it. But you pick it up and you get your one puff. Disgusting, you throw it away, but it's free. I mean, it's cheap. And then you look around for another soggy, one puff cigarette. Well, that's what I did for years. It's a mistake. Although you can make money doing it, but you can't make it with big money. It's so much easier just to buy wonderful businesses. So now I would rather buy a wonderful business at a fair price than a fair business at a wonderful price. You really want to be in a wonderful business because the time is the friend of the wonderful business. You keep compounding, it keeps doing more business.
Like most investors, Warren Buffett's diversified portfolio has consolidated over time. As of December 31st, 2022, Berkshire Hathaway's top 5 holdings made up about 75% of the company's entire portfolio value. Apple is Berkshire's top holding, accounting for about 40% of the company's portfolio. That's about 4 times the size of the next closest company, Bank of America, which accounts for just more than 11% of Berkshire's holdings. Up next is Chevron. The oil giant accounts for just shy of 10% of Berkshire's holdings, while Coca-Cola, one of Buffett's most famous investments, particularly given his insistence on always sipping that soft drink, represents 8.5% of the portfolio. And American Express, a longtime holding of Buffett, rounds out the top 5, accounting for 7.5% of Berkshire's holdings in this.
Serves as the CEO and chairman of Berkshire Hathaway. Since taking over the company in 1965, Buffett, greatest investor of all time. At age 92, he still serves as the CEO and chairman of Berkshire Hathaway. Since taking over the company in 1965, Buffett grew the value of the stock at a compounded annual gain of 20.1%. For comparison, that's nearly double the 10.5% annual total return of the S&P 500 over the same time span. This difference may not seem massive until you realize the power of long-term compounding. To put it into context, every $1,000 invested into Berkshire would have turned into $36.4 million. Every $1,000 invested into the S&P 500 would have turned into $302,000. Companies with sustainable competitive advantages and holding them long-term. These are businesses with wide economic moats that generate real cash flow. Buffett then uses the earnings and dividend payments to reinvest and acquire ownership in more productive businesses.
Let's also take a wider look at where investors think the market is headed this year. One big name weighed in over the weekend, none other than Warren Buffett himself. In his annual letter to shareholders, a key quote, Buffett comments that stocks often trade at truly foolish prices, both high and low. A warning to ignore the noise around the markets. The Oracle of Omaha had also chosen some very select words for naysayers of share buybacks, saying that they are either, quote, the economic illiterate or a silver-tongued demagogue, and adds the characters are not mutually exclusive. Let's take a closer look at where stocks are headed and whether we'll see a bottoming out. Joining us now with more, we've got Caterina Simonetti, who is the Senior Vice President and Private Wealth Advisor over at Morgan Stanley Private Wealth Management. Thanks so much for taking the time here this morning. First, the major item from you that perhaps sticks out from this weekend in Warren Buffett's shareholder letter. What would you be really keying into here?
Well, Brad, thank you for having me on the show. And Warren Buffett certainly is hard to ignore. When you think about it, the focus of last year was inflation and Fed action. And we seemingly underestimated inflation. And now we're seeing the results of it. And the big surprise for this year is, of course, broadly, we thought that, by early this year, as a matter of fact, right now in February, Fed would be done raising rates. But economic data surprised us to the positive. And so Fed is going to continue. But as we look at this and as we continue focus on the Fed, in our view, the focus should be on the earnings revisions, because this real story for 23, in our view, is the fact that it was easier to be profitable during the times of the high inflation. As inflation is coming down, these profit margins are harder to find. And the U.S. company specifically are going to be revising their earnings and setting them to the more normal level. And it's going to be really viewed by the market as a negative, as it should be. And we think that this is what is really underestimated by the general investing public. And so we think that there is a lot of risk in this market, and that the risk reward is just not there. So which gives us a lot of caution.
Given the billionaires' prior investment success, a heck of a lot of it, our own Josh Schaefer is here with a breakdown of how Buffett became a $100 billion man. How do you do it?
So when you take a look at Bloomberg's index, it says that Warren Buffett is worth $106 billion today. Nearly all of that is tied to Berkshire Hathaway stock, which Buffett started buying at less than $10 a share in the early 1960s. Now today, one share of Berkshire Hathaway Class A shares costs about $463,000. But as Buffett's bets have grown bigger, some recent buys really stand out. Up first, Bank of America. Buffett famously piled $5 billion into the stock in 2011, and since then, shares have grown over 400%. Some thought Buffett was late to Apple when he started buying in 2016, but Apple shares have also risen more than 400% since he bought. And more recently, Buffett's been an oil man, dumping billions into Chevron and Occidental, with Chevron shares roughly doubling since Buffett significantly increased his position in late 2020, guys.
Okay, so where does Buffett stack up among the billionaires right now?
So he's not number one. We should start there, right? That's Bernard Arnault. He's number one, and then we've got Elon Musk at number two. And what I want to show you guys here, let's take a look at Elon Musk's net worth. See how that chart kind of moves up and down. It looks a little chaotic, right? Elon's still number two, but you can see it almost looks like Tesla's chart, right? To some extent, these billionaires, it's very tagged to what their stock does, right? And then when you look at Mark Zuckerberg's, he also shot up very quickly with Meta, but then see how much he fell as Meta's stock fell. Then when you look at Warren Buffett, the slow process, right? Buy and hold, buy and hold. A little bit more of a steady chart there, and significantly more than Zuckerberg. So that's sort of my biggest takeaway when you compare him to some of the other billionaires and maybe the modern tech billionaire, is Warren Buffett has been able to sustain, while some of these other billionaires are really pegged to one stock, one tech stock that has been a bit more volatile in recent years, while Buffett has been more consistent.
Slow and steady wins the race.
Yeah, indeed.
I always taught you that.
Yahoo Finance's own Josh Schaefer breaking down all things the Oracle of Omaha. Buffy, the stock market slayer, here on the day. Thanks so much, Josh. 1% on the Dow Jones Industrial Average. And since you mentioned last week's activity, wanted to give our viewers a look at exactly how we've been trading coming into today's trading activity and the start of the session. We are down over the past 7 days by about 3.2%. Now that takes us past last week and even the week before just by a blippity blip. So ultimately here, as you're taking a look at that chart, keep that in context here of where we have been moving over these recent 7 sessions sessions or so. Also, over those past 7 sessions, you've seen the NASDAQ composite move lower by about 4.5%. Here today, though, out of the gate, some strong activity. We're up triple digits, 125 points on the NASDAQ. That equates to about 1.1%. Also on the S&P 500, you're seeing that higher in the green by about 0.8%, rounding out that hat trick, the trifecta, the triple-double, whatever you want to call it up. However, the past 7 days.
First up, a call to action to all humans: start saving money. Buffett says this: it is those dedicated savers that are forefront in my mind as I write this letter. He adds, Charlie and I are not stock pickers, we are business pickers, telling people to save money. And maybe they're listening. The U.S. savings rate is now at a 1-year high at about 4.7%. I think Buffett wants to see it even higher. Takeaway number 2, investing school is in no session. Again, no surprise here in the Warren Buffett annual shareholder letter. Buffett noting this, saying, quote, the lesson for investors: the weeds wither away in significance as the flowers bloom. Over time, it takes just a few winners to work wonders. And yes, it helps to start early and live into your 90s as well. Warren Buffett, 92 years old. His longtime partner, Charlie Munger, 99 years old. Warren Buffett saying, if you want to be a successful investor, invest for the long term. No surprise, that's typical Warren Buffett being Warren Buffett. Takeaway number 3 here, a message or messages to all politicians here. Warren Buffett taking some jabs at folks in DC, noting this: Berkshire also offers some modest protection from runaway inflation, but this attribute is far from perfect. Huge and entrenched fiscal deficits have consequences. Interesting take there from Buffett. Buffett also says, really tries to, I think, champion stock repurchases, saying repurchases, those that tell people that repurchases are harmful to shareholders or to the country are particularly beneficial to CEOs. You're listening to either an economic illiterate or a silver-tongued demagogue. So Warren Buffett taking some swings at politicians. What we did not hear in this letter: no succession plan. Warren Buffett and Charlie Munger will be at that May 5th to May 6th annual shareholder meeting in Omaha. Brian Sazi out.